All right, guys, posting a late reel. It's about 10, 11 o'clock on November 2nd. All right. And I have a couple things. I have a lot of things that I'm doing and have to do, right? We have a construction crew. We have we do renovations ourselves at InteleCOM. We do acquisitions ourselves. We got a team, a company. We're hiring new construction manager and a new foreman on site this week, and we just got a new project manager in too. So I'm stoked about all those things, but I'm making this message because I'm letting you in on what I'm doing. And I've created a new model. It's called the triple play, and it's a low risk, high reward investment for investors. And this year, we're going to use that. It's modeled after multifamily investments, where it gives you tax depreciation, it gives you cash flow, and it gives you equity, right? So it's very intelligent for single family. And the reason that we did it is because single family is extremely discounted, but it's still going up very much in value. And if there was a way to bypass the banks, we wouldn't have to have such high interest rates. So we could make a lot more things, properties actually work on the numbers. But to do that, we have to raise, $10 million this year if we're going to buy 25 single family houses. Now, we value add, right? We do the construction. So we're going to add a unit to all of these properties, right? Because some of the biggest problems right now is also affordable rent. So this strategy and everything that it is was highly thought out to tackle all of the problems right now that are going on. People don't want to invest in real estate. People don't want to invest in stocks. There's very much not money being put into certain things. So we're trying to bypass all of that by creating a huge opportunity, right? So I'm coming here to say I have a property under contract that fits this model. It's the absolute perfect one. Single family home, high growth area, has not really ever in the DC area. We've not seen much drops, if any, other than maybe 1% or something like that. But the graphs 5 to 10, 20 years have always been trajectory upwards. So I really believe that that is going to be the case. Things are going to be stagnant for a small time. So I totally believe in this area of the Washington, D.C. metro as a continuous growth area. I believe this is a dip, and we have a small amount of time to act on it. And so I've put together something that is building a huge team with huge possibilities, huge upside, and single family is extremely low risk, especially here. We're value adding, doing the construction rate immediately to the house, so its value has increased. We buy them at a huge discount because they need renovation, right? Plus, we're adding units or rooms into all of these properties. The one I have right now, it has a kitchen in the basement, y'all. The basement just needs to be finished with drywall around it. It has a kitchen, there's a room and a bathroom that just don't have drywall in there. So we're going to finish this basement, add square footage. It's a separate unit. We're going to rent that out. We're going to finish the top just needs paint. I mean, I have an inspection report of it too. So super clean house, super undervalued. The ARVs are above 600. We're in at like 430, right? And it just needs a 30K renovation. Our team's going to do it. We have it on the schedule right after our Airbnb that you see me talking about that just got funded. So I am putting it out there. I have it under contract. I don't want to get a loan on it. I want to start this model right now and have this be number one out of 25 this year, right? 10 million at an average price of $400,000, right? We want to give $10 million of opportunities to people, right? Because I guarantee if somebody invested $10 million and it was a portfolio and there was different investments, I guarantee they would not have had a 30% on average increase that had tax depreciation, cash flow monthly guaranteed, plus an equity payout on the sale of the property when it's appreciated, one, from our renovations, and two, over the course of a 3 to 5 years, which is what this investment term is. So it's always mind blowing because I guarantee the last investments that happened over the course of last year, had someone had an opportunity like this, or a group of a few different people to put 10 million in, it would be so much of a lower risk. But people are chasing so much of this shiny objects and startups where the person hasn't even been in the business or the industry. It's just a thought, just a theory, right? I guarantee the last $10 million of investments last year did not get anywhere near that type of return. So we have an opportunity, one. Two, I'm putting it out there because I have 10 days to raise $460,000 on this property, right? But I'm giving somebody 30%. I'm giving them instant tax depreciation because I'm going to put two tenants in this property after we're renovated. I'm giving them monthly cash flow in the tune of $2,000 per month over the course of 3 years. Why? Because I can rent this house out for at least $4,000. So I can take $2,000, and the other person that put this 460,000 down on this house is claiming tax depreciation because the renters, and they're going to get $2,000 passive income over the next 3 years, right? Which is close to $100,000 in cash flow monthly. Now, why is that important? Because monthly cash flow is going to bypass all capital gains taxes. So I'm giving away an investment in a way that actually lets somebody, one, move capital into this investment and claim depreciation, move this capital out of their account, right? Plus get back monthly cash flow on it that's going to be very low and not cause any tax issues, right? Then I'm going to, at the end of it, after the tax depreciation can be claimed, right? Then when they get this money back, it's going to be in a 50% equity stake. So when they stop getting depreciation, right, we're going to get them their capital back so they can offset some of that. Principal plus interest, right? Interest monthly plus the equity that we make in selling or refinancing this property. So in this scenario, we're saying over 3 to 5 years, if it's built 100,000 in value, the property, they paid 400,000, it's worth 500, they get 50,000 and we get 50,000 on the split, right? So now they've got about 100,000 in monthly passive income over 3 years, right? They get 50 grand of this house that we just split. That's $150,000, all done strategically in the way that they get to keep the absolute most of it, claim depreciation on it, and offset it, move it right before the end of the year, right, into something real estate oriented instead of just keeping it in their bank account and then having to pay taxes on it. You could also do this with a 401k or a Roth IRA. It just needs to be moved into a self-directed Roth IRA. So now we've opened up all of these different pieces and done it in a way that gives people absolutely more than they could ever get in really any other thing in place. Now, multifamily, personally for me, is a very kind of up and down, and people are really behind in their loans. And single family properties are not, they are not gauged and guided by the rents. Multifamily is gauged and guided by the rents. So when rents go down, the value of multifamily has gone down. I'm not saying that there isn't a deal that you can get when it hits a certain amount, right? But for me to say I was going to jump into multifamily because I want to give this type of investment to people, I'm going to stick with what I got and what I know currently right now, and all of the work that we've been putting in and effort into getting these single family. We're seeing that they are just going for a lot lower than they ever have in this area. And that is a huge, huge, huge discount and opportunity to buy right now. And they're going to even back out and appreciate well. Plus, we're going to force that appreciation by doing renovations. Now, back to what I just said, single family is not gauged on what the rents are. If the rents go down because people cannot buy a turnkey rental property because of interest rates, rents are actually supposed to increase 6% this year. So if rents increase, but the ability to own rental properties decrease, there's going to be a lack of rental properties. Plus, this problem in rental properties, the number of rental properties has nothing to do, it's not directly correlated with properties, with single family home properties value. So just because the rents may go down or the ability to buy rentals and people putting rentals into the market may go down, it's actually causing the rents to rise because there's not enough rentals. So competition is going to force rental prices up, but people cannot do them because the interest rates don't make sense for someone to just buy a rental, especially in high equity areas. So that's the whole reason we're doing this. But because of all this happening and rents or the ability to rent is going down, it does not mean that the property's value goes down at all, because single family homes properties are just based off of comps. And the comps in the area and the long-term growth and correlation in this area has always been rising and always been on the trajectory of up. So we're going to give ourselves this 3 to 5 years, right, to give us this appreciation in the market, to let it correct and let rates go down. And we're going to end up with a bunch of rental properties purchased in this year at historical discounts, right? So get on the equity with me, get on the rental cash flow with me, move this money this year before taxes, get depreciation when we get the rental stabilized, and get what yo, let me tell you something. I'm in rentals, I'm buying rentals. I'm trying to get like 500 a month on rental properties, right? What I'm giving away because we're bypassing the bank is literally 2 grand a month on average, right? For a nice single family home. 2 grand a month giving you and keeping myself. Like, that is crazy to be a passive investor with the opportunity to get 400 or $2,000, $4,000 rent split between us on a $400,000 investment. 30% over 3 years, right? Cash flow, equity, and tax depreciation. So I'm like extremely stoked about it, but I'm calling myself out. I'm starting with the first one right now. Not the first rental for us, not the first Airbnb, not the first rehab. We've been doing this for a year, but the first one with this model where we're bypassing the bank, letting somebody invest directly into it. We're having property managers manage the rentals, so it's a streamlined process, and we're doing the renovations ourselves in-house, so we're keeping them low, and we do all of our own marketing and acquisitions, so we know we're getting the property at a severe discount. We do inspections, we know it's a good quality house, we know what the after value comps are in the 600s, right? And we have this thing at 430, and we are so ready for this thing, this project. We're hiring a bunch of new people, new crew, got a new foreman, new construction manager, actually from my mastermind, the construction manager too. So I know he wants to start getting into some bigger things and really help us develop from the ground up. And we have a project manager who knows Scrum, has his PMP, all that kind of stuff too. So he's totally ready to scale this thing, and we are all just ready to roll, excited to get this thing out there. But I'm calling myself out. I have 10 days to raise $430,000. For me, that is a lot. I've only raised about 50 to 100,000 per property, but I'm going all out this time. Every day I'm going to talk about it, put it out there. It is my one thing that I'm doing that I got to do because we actually go to Brazil in 10 days too. So I have to close on this house. I have to get this thing done. And I'm actually renting my house out when I go to Brazil. So I go to Brazil with 0 monthly payments. And I'm actually going to find my next spot while I'm in Brazil. So crazy stuff happening. I'm calling myself out. I'm putting a timeline on myself. I'm not sure what I'm going to do if I don't make it happen, but I'm not even really accepting that I won't make it happen. So I don't know where it's going to come from. I don't know who it's going to come from. I know it's a huge, huge, huge opportunity, and I know what other investments are out there. So I know it's a much better investment. And I'm telling you, on this theory, this idea, this is totally research developed. It's totally based off facts. It's totally based off exactly what I think is going to happen. And I'm going all out on that theory, on that idea, on that low risk and high reward model. And I'm doing it. Nothing's going to stop me. And I'm going to give someone the opportunity to invest $10 million this year for 25 properties and 50% of everything, sharing it with me. So, yo, turn in, tune in, and I'm going to call it out every day, what I'm doing that day, how it's working. So, if you want to raise capital, raise any amount, if you've ever done it before or not, or you might even be way above me on that level. Let's hold each other accountable. Let's freaking go after it. It's my intent. It's my focus, right? I talk about, I have the sticker from the book, High Performance Habits. It says, like, who needs my A game the most right now? The most of anything that I need to do is in the next 10 days raise $460,000 for this single family to 2-unit conversion that we are going to put into the market with my triple play method, which I'm calling it triple play because it is triple the benefits, tax, cash flow, equity, and it's triple the amount that most of anything is going to give. So it is the triple play for those two reasons, because it is triple what anybody is going to get anywhere else. That is the truth. So follow me as I raise $460,000 over the next 10 days, or I'm not sure yet, but I saw in the somebody, one of these coaches said he had to eat dog food if he didn't do it, and I think he did eat dog food. I'm not going to say that yet, but you tell me what you think that I should do if I don't succeed on my goal. So I'm tuning in to y'all's responses and answers on that. So let's go, y'all. Stoked. 10 days, $460,000 more value than anybody else has brought to anybody. And that's how I do it. Bring as much value as humanly possible, and everything else will work itself out. Give back. Be the best. Be the best with the intent to become the best so you can give away the best version of yourself. That's what it's all about. If anybody knows me, that is exactly what I do and how I think and how I react and how I act. So follow me. 460, 10 days. Let's roll.